Hello, fellow traders. Tis I, the Rumpled One, coming to you on Tuesday, December the 12th. The year is 2023. Let's talk trading. Change, part 3. These videos are for educational purposes only. Your results may differ from mine. Okay, we talked about change in this, coming from the perspective of if you want to get better at something, and in our case it's trading, something has to change. Of course, that sounds simple and it sounds obvious, but how many traders actually say, okay, there's something I have to change. Let me figure out the one thing I need to change, and then we'll move forward. Now, usually, what do they change? They change something external, indicator, what they're trading, etc. But what we're focusing on is changing something that's internal. That's you. Now, one of the things that you might need to change is how much you lose per trade. That's something you can control under most circumstances. If you're trading, during the news and you have a 3-pip stop loss and it goes against you, it might, blow right through your stop loss. But under normal, usual trading conditions, that's very infrequent. The point is that if you're really losing too much per trade, then you have to change your stop loss and or your position size, so you don't lose as much per trade. Now, on the other hand, you might have your stop loss employed, but let's just say you're in a slump. You just can't seem to buy a win. Trust me, I know what that feels like. So what might be happening is that you are now in the fear cycle. Okay? And you're feeling a lot of pain coming from the market. Now, the thing is, how do you fix that? Well, let's say you normally trade maybe 20 trades a session, and maybe you're using the 5-minute chart for your signals. Well, on a 5-minute chart, you get 12 chances of getting a signal per hour. Did you ever think about it that way? So how about we cut that down? How about we go to the 15-minute chart? Now you get 4 chances per hour to get a signal. Gives you extra time between trades, possibly, to take a look. So, for example, maybe you're trading the buy zone every 15 minutes, but at the moment you're biased long, and we'll get to that maybe today. But for whatever reason you're biased long, but the price is below the open of the M15 candle. So you basically just wait. But what you might be doing is you might see it could be 10 or so pips below that open. Then all of a sudden you see something where it looks like it's going up. And the last thing you want to do is miss out on that trade. Well, it's the FOMO. You don't want to miss out. Or maybe it's above the M15 open, but for some reason you hesitated, but you missed it, and it's already shot a couple pips past your entry point. And now you see it going, and once again, maybe FOMO kicks in. And so what happens? You jump in and you get inflected, meaning as soon as you get in, price stops going that way and starts going the other way. And of course, all these things cause you pain, but not the market. It's you. You're doing it to yourself. Because in this case, you feared, once again, that you might miss out. So you have to, look in the mirror, and you're going to have to just understand you're doing things out of fear. Because that's all it is and if you weren't worried about the result, you wouldn't make that trade. You wouldn't take it. But it's fear, and you're focused on the result. You want to make money. You don't want the Romo, because you don't want to have regret that you missed out on that trade. So, but what's probably happening is, along with all that, because you're doing these things and getting reflected, you get the robs, the regret of being stupid. And, and I think we had a video, Stop the Stupid, because if you look at what's going on with your trading, and you really take an honest look, there might be some stupid stuff that you're doing. And you're kicking yourself because you know better, but for whatever reason, and that reason being you're human, and you have these fears going on, is that you haven't gotten control of your brain. And so that's just one of the things you're going to have to change. On the upside, you could be in a trade, and maybe you like to use the indicator 2 or the mid dots or whatever, or the candle colors or higher lows, but everything's telling you, hey, you're long and it's going up, it's going up. But what happens? Oh, you don't want to lose that profit. You're afraid you're going to give it back. Even though your chart's telling you to stay in the trade, your brain, your emotions are getting the better of you. And you trade from emotion. You're not trading the market. Now, I will admit, this is one of the things I do, because I have a rule, but it's based on brain management. If I'm in a trade and it goes against me, and I've been in that trade for a while, and then it starts coming back, then I usually get out at first opportunity, and then I usually regret getting out, because it just goes on and on and on. But that rule has saved me a few times, because I just do have sometimes the nasty habit of getting inflected. And it's usually because I jumped in, I kind of missed the trade. If I would have been in 5 points or 7 points earlier, I would have had the chance to get out with a profit, but jumped in too late. And actually, where I jumped in, I could have been jumping out with the profit had I made that. So that's something I'm working on. I usually don't do it as much as I used to, but I still do it. And actually, part of the reasons is sometimes I'm looking at something else, then I look back at the chart, which my focus is off. So it's all on me. It's got nothing to do with the market. And so once you can say that it's all on you, that's when you can start to make the changes you need to make and cut down on those entry errors. Because chances are you probably are making more entry errors than exit errors. And now an exit error is when, once again, you don't take the signal. Either A, you didn't wait for the signal, or B, you didn't take the signal when it came. Those are exit errors. So those are just some of the things that you're going to have to change. And I guess some of you traders are a little shy. You haven't let me know what things you're working on to change to get better, but that's okay. You know, some people don't want to share publicly, and I can understand because it can be a little embarrassing, even though there is one trader out there that started their own thread over on Crestlick.com, and they're going to, you know, post their trades so they have full, you know, exposure, full accountability to the rest of us. So hats off to you, trader. Okay, let's take a quick look here and see what's going on with the pound. And we're right around the daily open here. Oh, opportunity. Looks like we've got about 78 pip range. We did have some news about an hour ago. And what did that look like? That was the news. In and out of the upper and lower wick zone. Back in that wick zone now. Right around the previous mid for the day. Lots of opportunities here. And I just noticed something. This numbers decreased, so that's interesting. And that's probably because today we've had all these closes in this upper wick zone. But normally this number is 70 or higher. But you can see here you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 bars that closed in that wick zone so far today. Let's see here. Take a look at the flip-flop boxes with the fib retraces. I'm wondering, did anybody short the 2600 level coming back down? That would have been a very nice short. And you can see here price went actually slightly below the launch pad and then came right back up through the launch pad, and it's coming right back down. So looks like we had a nice flip-flop box trade there. And Walmart's on vacation this week, so we probably won't be hearing from him unless maybe comes in on Thursday or Friday. And just on the simple price action screen here, you can see there's 2600, the 75 psycho, the 50 psycho. We're right back, just hit that 50 psycho line. So remember, from here, from 50, it's either going to 75 or 25. Take your pick. And we had a M30 candle, 76 pip range. And considering today's range is about 78, that's pretty much the range. Except right here we put in the low. So there you have it, right there. So fellow traders, change. I hope you determine accurately what needs to change, and that you go ahead and start working on changing it, because that's the way you're going to make money in trading, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.